you need to see this before the next big market move. A massive Q4 altcoin season is being predicted, with trillions of dollars ready to flood into specific sectors like AI and DeFi. But at the same time, technical analysis suggests Bitcoin's current pattern is mirroring 2020, pointing to a potentially explosive finish to the year. While institutional players and even corporations are buying up Bitcoin faster than it can be mined, the fear and greed index has dipped, showing uncertainty in the market. We're at a critical turning point. Some analysts are watching September 29th as a potential end to the bull run, while others are forecasting a rally to $130,000. With Bitcoin hovering around $114,000, the next few weeks could define the rest of the year. Are you prepared for what's coming? In the latest video from Altcoin Daily Channel, host Aaron Arnold speaks with Adam Gongol, the CEO of Blanksquare, about the surprising lack of privacy in crypto. Adam points out that even popular wallets like MetaMask aren't truly private, making crypto transactions less confidential than traditional payments. Blanksquare aims to fix this by offering a composable privacy stack for Web3. Instead of building a whole new blockchain, they provide an SDK that lets developers easily add privacy features to their existing wallets and apps. This is powered by ZK-proof technology, which hides transaction details by mixing funds in a shielded pool. Adam also touches on the critical issue of compliance. Blanksquare has a system called Shielder Guard that allows for the reversal of anonymity if there's proof of illegal activity, making it a more regulator-friendly option. He believes the future of crypto will involve a variety of privacy solutions to suit different needs, from users who want absolute anonymity to institutions that require strict compliance. Adam brings up a super relevant point that many crypto users overlook. Public blockchains are public. While your name isn't directly tied to your wallet, blockchain analysis can easily link your activities together. The idea of a stripe for privacy is compelling because it addresses the problem at the source by giving developers the tools to build privacy directly into their applications. This is happening at a crucial time, as the conversation around privacy and regulation is getting louder. The recent legal roller coaster with Tornado Cash, which saw sanctions imposed and then lifted, shows just how unsettled this area is. Blanksquare's approach to auditable privacy seems like a smart middle ground that could appeal to businesses and institutional players who want to enter Web3 without falling foul of regulations. The market is clearly heading in this direction. Even the Ethereum Foundation has its own privacy roadmap, focusing heavily on integrating ZK proofs. With Bitcoin currently trading around $114,108 and Ethereum at about $4,175, the stakes are incredibly high, and the need for robust, user-friendly privacy solutions is only going to grow as more value flows into the ecosystem. In the latest video from Crypto Rover channel, the host discusses Bitcoin's recent price increase and its position at a critical trading level. He mentions his ongoing long trades on Bitcoin in a newer, profitable trade on ITÆS APT, which involves a $600,000 position. A significant portion of the video is dedicated to addressing community concerns about a CME gap, with the host explaining that while these gaps usually get filled, it can take weeks or even months. He points out that Bitcoin has formed a higher low, indicating a potential continuation of its upward trend, especially if it breaks a key resistance level. The video also touches on the promising fundamentals of ITÆS, noting its growing protocol volume and revenue, which he believes the price has not yet reflected. He anticipates his ITÆS trade could yield a 5-6x return. The host concludes by mentioning a major pennant formation for Bitcoin that is nearing a breakout, which could determine the next big move for the cryptocurrency. The video's analysis of Bitcoin's technicals and the ITÆS trade is interesting, but the market has its own plans. As of late September 2025, Bitcoin is trading around $114,108, showing some volatility after a recent dip. The concerns about the CME gap mentioned in the video are a valid technical point that traders often watch, but broader market sentiment seems to be the main driver right now. The overall crypto market cap saw a modest increase of about 2.7% in September 2025, suggesting a cautiously optimistic sentiment as we head into what many hope will be a bullish October. In the latest video from Crypto Tips channel, the discussion centers on Bitcoin's recent market behavior and the broader economic landscape. Historically, September has been a tough month for Bitcoin, but the recent downturn was only a minor 2 to 3% dip. The speaker notes that Bitcoin's volatility is decreasing as its market cap grows and more institutional players get involved. He suggests that the days of massive 30 to 40% corrections during a bull run might be behind us. A key piece of advice is to dollar cost average out of positions to take profits rather than trying to sell at the absolute peak. The video brings up some interesting points about Bitcoin's maturing market and reduced volatility. Looking at the current market, Bitcoin is trading around $114,108, and while it has seen volatility, it's true that the massive, gut-wrenching drops of previous cycles feel less frequent. Recent analysis from late 2025 actually shows Bitcoin's volatility has at times been lower than that of the S&P 500, suggesting it's behaving more like a counter-cyclical asset. The Crypto Fear and Greed Index is currently sitting at a neutral 50, which aligns with the video's observation of a less fearful market despite price movements. In the latest video from Lark Davis' channel, he gives a serious reality check about the current crypto market. He explains that this isn't 2017 or 2021 anymore. The days of getting rich overnight are rare. This market is a slow, steady grind that has frustrated even experienced traders. To succeed and actually walk away with life-changing money, he lays out 5 core principles. First, never invest more than you can afford to lose, as over-risking leads to stress and poor decisions. Second, you have to manage your emotions, particularly fear and greed, quoting Warren Buffett's famous advice to be greedy when others are fearful. Third, never go all in on a single trade. Always keep 5 to 10% of your portfolio in cash to take advantage of dips. Fourth, do your homework and understand the fundamentals of what you're buying instead of trading blindly. He references the 90/90/90 rule, where 90% of traders lose 90% of their capital in 90 days. Finally, and most importantly, take profits. Don't just get rich on paper. Set clear targets and sell when you hit them to secure your gains. Lark's advice to remain disciplined and strategic is timeless, and it's especially relevant in the current market environment. The video's characterization of a slow grind in 2025 feels accurate. As of today, Bitcoin is trading around $114,108, while Ethereum is near $4,175. The market isn't seeing the wild parabolic runs of past cycles. Instead, it's experiencing choppy price action, with Bitcoin recently rebounding about 5% from a low of $108,600. The Crypto Fear and Greed Index is currently in the neutral or bearish territory, sitting around a score of 47 to 50, which shows a lack of strong conviction from traders and reflects the cautious sentiment Lark describes. In the latest video from Ben Cowan channel, the discussion centers on how Bitcoin's current market action is strikingly similar to the pattern seen in 2020. The analysis points out a sequence of a capitulation low, a strong recovery, a period of sideways trading, a local top in August, and a subsequent dip in September. This September dip has so far followed the 2020 model of 2 weeks up, followed by 2 weeks down. The bull market support band, which consists of the 20-week SMA and the 21-week EMA, is presented as the key level to watch for support. While the historical parallel is strong, the video suggests not to expect a rally as explosive as the one in late 2020 and early 2021. It also brings up other post-halving years like 2017 and 2021, where market cycle tops occurred in the fourth quarter, cautioning that the current cycle might not extend as long as some believe. Regarding Ethereum, the idea is that it will likely reach new all-time highs, but if Bitcoin continues to trade sideways, Ethereum could drift down to its own 21-week moving average. Ben Cowan's fractal analysis comparing the current market to 2020 is compelling, as historical patterns often provide a useful roadmap in crypto. However, the current market is navigating a different set of external factors. As of late September 2025, Bitcoin is trading around $110,000 to $114,000, showing some resilience after a volatile month that saw a dip to the $112,000 level. Ethereum is holding its own at approximately $4,100. The market sentiment has recently shifted from fear to neutral, but there's an air of caution. A significant factor is the looming U.S. government funding deadline at the end of September, which could introduce broader market volatility. At the same time, institutional interest remains a powerful force, with spot Bitcoin and Ethereum ETFs continuing to see inflows and BlackRock's iShares Bitcoin ETF holding over 760,000 Bitcoin. While the 2020 pattern didn't have to contend with the massive influence of these new financial products, the current market does. This institutional presence could either dampen volatility or provide stronger support than seen in previous cycles. The market is looking ahead to October, a historically strong month for crypto, but it first has to get through potential macroeconomic and regulatory news, including an SEC and CFTC roundtable on crypto regulation. In the latest video from Coin Bureau channel, the host explains why uranium, once a disliked commodity, is becoming a critical resource. The demand for uranium is expected to more than double by 2040, driven by a resurgence in nuclear power. Tech giants like Microsoft are turning to nuclear energy to power AI data centers, and China is aggressively expanding its nuclear fleet, planning 150 new reactors. However, the supply side is facing a major crunch. Current mines will be depleted after 2030, and it takes 10 to 20 years to bring a new mine into production. The video's thesis of a uranium supply squeeze isn't just theoretical, it's actively playing out. The video mentions an $80 per pound price, and as of late September 2025, the spot price is hovering around $82.50 per pound, having seen significant volatility and upward pressure throughout the year. The fundamental deficit is stark, with global reactor demand of around 180 million pounds annually, far outstripping mine production of about 130 million pounds. This gap, born from a decade of underinvestment after Fukushima, is now being amplified by geopolitics and a renewed push for energy security. In the latest video from OutùHereÄs channel, the host discusses the recent crypto market turbulence, attributing it to a significant shakeout of long positions with massive liquidations totaling billions. Despite September historically being a tough month for crypto, it's currently in the green. The outlook for October and the remainder of the year is positive, with expectations of a market recovery. Historically, October, November, and December are the most bullish months for crypto, which aligns with the final year of the four-year cycle, also historically bullish. Upcoming events like the jobs report and talks from Fed governors are on the radar, but the general expectation is for more rate cuts, which is good for the markets. The video also touches on the likelihood of ETF approvals and listings in the near future. There's a mention of the Token 2049 conference in Singapore, which could bring significant announcements. A rumor about Binance's former CEO, CZ, stepping away to work on a DEX is also discussed. The video's cautious optimism for a fourth-quarter rally seems to be aligning with current market sentiment, even with the recent volatility. The host's point about September often being a difficult month is a common observation in the crypto space, but this year, the total crypto market cap saw a slight increase of about 2.7% in September 2025, suggesting some resilience. Bitcoin is currently trading around $113,610 to $114,193. While the video mentions a dip below $110,000, the price has since recovered, lending some credibility to the recovery narrative. The anticipation of Federal Reserve rate cuts is a significant factor. While some analysts fear that higher-than-expected inflation could lead the Fed to hold rates steady in the upcoming October meeting, the general expectation remains for at least one more quarter-point cut this year. This would likely inject more liquidity into the markets, benefiting assets like Bitcoin. The mention of the Token 2049 conference is timely, as these events often act as catalysts for market movements due to major announcements and networking among industry leaders. The rumor about CZ and a new DEX has been clarified, with CZ stating he is only an advisor to the Aster DEX project. Overall, while the market has seen some significant liquidations and shakeouts, the underlying sentiment appears to be shifting towards a more bullish outlook for the remainder of 2025, supported by institutional interest and potential monetary policy easing. In the latest video from Crypto Banter channel, an experiment was conducted to test the profitability of different crypto trading bots over 6 months. 3 bots were set up on the Bybit exchange, 2 used back-tested, trend-following strategies from a service called David Tech, and 1 was a popular grid bot that lacked back-testing data. Each of the 2 back-tested bots started with $10,000, while the grid bot was given $5,000 due to its unknown performance. The rules were simple: set up the bots and don't touch them for the entire period. The experiment in the video perfectly illustrates a timeless trading principle: strategy over hype. While grid bots are often promoted for their effectiveness in sideways markets, their vulnerability during sudden high volatility events was laid bare. The success of the back-tested, trend-following bots shows the value of strategies designed to perform across various market conditions. Currently, the crypto market is experiencing a bullish sentiment, with Bitcoin trading around $114,108. This environment, marked by significant institutional interest and the influence of ETFs, could favor disciplined, automated strategies that can capitalize on trends while managing risk. The total crypto market cap saw a modest rise of 2.7% in September 2025, suggesting a resilient, albeit cautious, market. For traders considering bots, this experiment serves as a practical case study. AI-driven bots are becoming more sophisticated, with some reporting the ability to adapt to changing market conditions. However, as the video's gridbot failure demonstrates, automation without a proven, back-tested strategy can be a recipe for disaster. The market's current positive momentum doesn't eliminate risk, and choosing the right tool with a solid underlying strategy remains as important as ever. In the latest video from Crypto Casey, she provides a straightforward guide on setting up and using the Tangem hardware wallet, framing it as one of the most affordable and simple ways for anyone to take full control of their digital assets. The walkthrough covers everything from unboxing the sleek, card-based wallet to the quick setup process, which involves creating a wallet, adding backup cards, and securing it with an access code, all in about 90 seconds. Casey demonstrates how to transfer $50 worth of Bitcoin from an Uphold account to the Tangem wallet to show how easy it is to move crypto off exchanges. This video does an excellent job of simplifying what many newcomers see as a daunting task: moving crypto into self-custody. The focus on a user-friendly device like Tangem is timely, especially as the market sees renewed interest. With Bitcoin's price hovering around $114,000 and Ethereum near $4,100, the importance of securing assets offline is more relevant than ever. The market sentiment, despite some recent volatility, is cautiously optimistic, with institutional interest signaling a maturing landscape. In the latest video from DataDash, host Paul Sampson looks at Bitcoin's recent rally through the lens of technical analysis, focusing on a critical date, September 29th. He points to historical Fibonacci timeframes that suggest this date could mark the end of the current bull run. Sampson discusses his use of harmonic patterns, like the crab pattern, to anticipate where the price might go next, suggesting a potential final push higher. He also touches on the 4-year cycle theory, which aligns with this late September timing for a major market pivot. While institutional ETF purchases continue to show steady accumulation, the fear and greed index has shifted to neutral, indicating uncertainty. Sampson explains that his macro analysis, based on symmetrical moves in past cycles, points to this period as a likely turning point. He believes a significant correction of at least 30% for Bitcoin is probable in the coming months, possibly after one last surge that could trap overly eager buyers. The videos focus on September 29th as a pivotal date based on Fibonacci time analysis from previous cycles, is a classic technical approach to predicting market tops. As of late September 2025, Bitcoin is trading around $114,000, showing some volatility after failing to hold higher levels earlier in the quarter. The analysis in the video anticipates a potential peak, which aligns with some market theories that Q4 2025 could mark the cycle's exhaustion point. In the latest video from CryptoIndy, she discusses a major development for Ripple, a new partnership with BlackRock. This collaboration allows Ripple's stablecoin, URLUSD, to be used with BlackRock's tokenized fund, BUIDL, and VanEck's fund, VBIL. The connection, made possible by ITÆS, gives investors in these funds a way to swap their shares for URLUSD, providing constant on-chain liquidity. The video mentions that BlackRock's BUIDL fund has a market cap of $2.1 billion. This setup allows investors to easily move between traditional tokenized assets and the world of DeFi to seek out passive income opportunities. She also points out the significant growth on the XRP ledger, XRPL, which has reportedly surpassed $1 billion in monthly stablecoin volume and is now ranked in the top 10 for real-world assets, RWAs. This partnership is a significant step for Ripple, but it's important to understand the nuances. This isn't BlackRock buying XRP, it's an integration of Ripple's URLUSD stablecoin into BlackRock's ecosystem, which is a powerful endorsement of Ripple's technology for institutional use. The real story here is the continued march of real-world asset, RWA, tokenization by major financial players. BlackRock's BUIDL fund has already grown to over $2.1 billion, showing the serious institutional appetite for these products. By making URLUSD a 24/7 off-ramp, Ripple is positioning its tech as a key piece of infrastructure for this new tokenized economy. While the video speculates about a future XRP ETF, the immediate impact is on the utility of the XRPL ecosystem. The current market seems to reflect this focus on utility, with XRP's price hovering around $2.89. The recent regulatory clarity in the U.S., with the SEC reportedly reclassifying XRP as a commodity, has certainly removed a major barrier to wider adoption by institutions. Overall sentiment in the crypto market is currently neutral, suggesting that investors are cautiously watching how these foundational integrations play out. In the latest video from The Modern Investor, the host discusses the relentless pace of corporate cryptocurrency buying, noting that demand is far outstripping the daily production of new Bitcoin. A key example is the Japanese firm Metaplanet, which recently added 136 Bitcoin for $15.2 million, pushing its total holdings to 2,036 Bitcoin and making it the sixth largest corporate holder. The company aims to hold 30,000 Bitcoin by the end of 2025 and 100,000 by early 2026. The video also covers the Federal Reserve's upcoming Payments Innovation Conference on October 21st, which will address DeFi, stablecoins, and tokenization. The host speculates this event as a precursor to the U.S. introducing a government-backed stablecoin rather than adopting a decentralized crypto like XRP. Finally, the host expresses confusion over a Canadian company called Luxfolio, which is raising $73 million to focus its treasury on Litecoin after moving away from Bitcoin mining, a move described as strange given Litecoin's lower profile compared to other major cryptocurrencies. The video's points on institutional accumulation and regulatory developments are still very much in play. Metaplanet has aggressively continued its Bitcoin acquisition since the video's recording. Recent reports show their holdings have surged to over 25,555 Bitcoin. However, Their average buy-in price of around $106,065 per coin is currently underwater, with Bitcoin trading at about $114,108. This highlights the volatility and risk involved, even for large corporate players. The Federal Reserve's Conference on Payments Innovation remains a significant event to watch. Discussions around a digital dollar and stablecoin regulation are intensifying globally, and this conference will likely offer more clarity on the U.S. stance, which could heavily influence the market. The most peculiar point is Luxfolio's pivot to Litecoin. While Litecoin maintains a dedicated community and functions as a reliable network, its market cap and institutional interest are dwarfed by Bitcoin and Ethereum. With Litecoin currently priced around $106, its potential for massive growth seems limited compared to the leading assets that attract the lion's share of institutional capital. This strategy appears contrarian and highly speculative in a market that is increasingly focused on a few key blue-chip digital assets. In the latest video from Alex Becker channel, the main topic is the arrival of the Q4 altcoin season. Becker explains that the current market pumps are just the beginning of a much larger move. He predicts a massive bubble where almost every altcoin will see huge gains, driven by trillions of dollars expected to flow from money markets into riskier assets like crypto. He lays out a treasure map of the 7 best sectors to watch. For beginners, he suggests larger, more established coins like Avalanche, AVAX, Cardano, ADA, and SUO, even predicting Cardano could reach $5. He then gets into riskier plays with higher potential returns across several narratives. In he points to TAO as a major player, with smaller coins like AOS, Destra, DSYNC, and Zigchain, ZIG, set to follow. For DeFi, he mentions Clearpool, CPOOL, and his own project, Black Hole, Black. He also identifies real-world assets, RWA, as a key area, highlighting Tharwa and Chainlink, Link. Finally, he touches on emerging sectors like robotics, with modular, mod, and RBR, and gaming, where he sees potential in Superverse, Super, and Beam. Alex Becker's forecast for a Q4 altcoin season is lining up with current market sentiment, which has turned increasingly bullish. After a shaky period, September is closing with a surprising 2.7% gain in the total crypto market cap, challenging the historical September curse. Bitcoin has shown strength, recently trading around $114,111, and institutional interest remains high, with BlackRock's ETF alone holding over 760,000 Bitcoin. The narratives Becker identifies, particularly AI and RWA, are indeed major themes in 2025. Grayscale's Q3 research confirms that altcoins, especially in the financials and smart contract platform sectors, have been outperforming Bitcoin, with Avalanche, AVAX being one of the top performers. This lends weight to his focus on these areas. His prediction for Cardano, ADA, hitting $5 seems ambitious from its current price of about 80 cents, but the market's momentum could make significant gains possible. The regulatory landscape is also becoming clearer, with the U.S. passing the Genius Act for stablecoins, which could boost confidence and liquidity in the market. This developing regulatory clarity, combined with the potential for more ETF approvals and Federal Reserve rate cuts, creates a favorable environment for the kind of explosive growth Becker anticipates. In the latest video from CryptoJeb channel, the discussion centers on a bullish outlook for Bitcoin, predicting a rally to at least $130,000 in October. This forecast is supported by recent price action, where Bitcoin established a higher low after bouncing from approximately $18,680 and reclaimed the 20-day exponential moving average. A bullish September, which is historically a weak month for Bitcoin, is seen as a strong indicator for a powerful fourth quarter. The analysis points to an inverse head and shoulders pattern forming, which targets the $130,000 level upon breaking key resistance at $118,000. On the fundamental side, The video draws a parallel between the current rally in gold and Bitcoin's potential future movement. Gold is experiencing a surge due to a crisis of confidence in the US dollar, but its technical indicators like the monthly RSI being the highest in 45 years suggest it is overextended and due for a correction. The theory is that capital will flow from a correcting gold market directly into Bitcoin, which historically follows gold's major moves. This, combined with unpriced and Federal Reserve rate cuts, strengthens the case for a significant Bitcoin rally. A short-term dip to fill a CME futures gap between $110,000 and $111,000 is considered possible before the larger move up. The video lays out a bullish case for Bitcoin based on technical patterns and a capital rotation from gold, predicting a target of $130,000. However, the price points mentioned in the video, such as targets of $118,000 and $130,000, reflect a market from a different time, as Bitcoin is currently trading around $114,108. September has indeed seen a crypto market downturn, with about $351 billion wiped from the market cap, and the Fear and Greed Index has dipped into fear, challenging the video's premise of a bullish September setup.